Welcome to TradeTheNBI.com. This is John. This report is for the 6th. Another spectacular day in the market. Much smaller candle than the previous day, but still fit within our expectation above that 26.1650. The bias obviously to the long side. Rising shakeout. Everything's improving from a DSC standpoint. Green above cyan, rising red, rising steel. The problem with the steel is, though, it's obviously going to reach a point where it's going to be a little too far, and then it's going to start fading, and at that point you need to see the red move into a new zone to really maintain any rally. At this particular point, you know, that 50% looming at the 27 number is going to be the big hurdle. We'll see how it plays out when it gets there. And interesting, because you look at the NQ and also just barely over that 38%. So from a comparison standpoint, right at it and a little bit over, but much smaller finish on the day. So a little bit closer to parity between the two. And didn't get affected by the euro, but the euro still elevated into the higher range, even though it's at the bottom side of it. It's been expressing weakness since, well, right back over here at the 124 range. Still not causing any problems. This volatility pump is what I would really call it, because really what was happening is the fear factor, people jumping into it with the yield, but again, equities are still the favored, because we're still have to get to that point where they see the inflation reaction. It's already built in for those of us who can see down the road, which we're just going to look at oil, and that will tell us where the start of it is. But the wage issue becomes a secondary factor, and as that labor market tightens, there's not going to be any question that rates are going to have to climb. No question about that. The question will be how fast, and whether or not there'll be any slowing along the way. The Fed seems determined to want to just ramp them quickly, and that could put the brakes on things quickly. So oil, so maintaining this elevated level, and that is going to have a price impact. But with full employment, that it may be less noticeable. I shouldn't even say full employment, at least the appearance of full employment. There's still plenty of slack left that has to be absorbed, which is why you still keep seeing these great job numbers, and you keep thinking, yeah, what are you going to have, a zero unemployment rate? It's just because they never accurately marked it in the first place. So distortions, it's always been the name of the game for playing with data. And gold. The bottom side of the range, it's still been in this little bit of a DOC spread for a little while here, and just chopping around in the muck again, also waiting for some kind of direction. This is no doubt on the direction. Bitcoin has been straight downhill, keeps making new lows. So even though it's finishing off them, the fact that it keeps making new lows is certainly not bullish in that standpoint. So the dream of cryptocurrencies overtaking the markets immediately is put off for just a little bit longer. It was a pretty good size day from a volume standpoint, and all pretty much healthy from our early morning pump that came in. We ended up with a few really nice signals that took place right in about here. We ended up with several points where the cyan moved below red, but in this particular case, it was a good one. Let me increase the size of the chart so it becomes a little easier to see it. And if we stay over here on the left side, as we get to the 50% breakout, we were underneath. Always a good point to move, but we got here to the peak of it, and we started to see lower shakeout. But it was interesting because at that lower shakeout point, you started with that rising gold again, and that rising gold usually calls for us to push back to the highs, and that's exactly so. Even on lower shakeout readings, we ended up making just a slightly new high, which fulfilled it right in place with the expectation of it. And then our magenta dipped below 15, and then we started to get the DOC spread, which meant for a perfect short right at the ABM gold, and it took us right down to the 50% line. And that was the point where we had a nice reset. And then we ended up with another little pop, couldn't quite get to the same level, and then a much stronger DOC spread happened right here at pretty much a zero level of the shakeout. And that dip was quite nice and extensive, but it produced this really nice buy that we were posting on the Skype chat where we had a beautiful MBI at the lows, reset of the ABM, everything was in alignment with that, and caught it early with that rising shakeout. It was funny because we were expecting a move first to the 38%, and then when it got there, we were looking maybe to the 50% because we kept having rising shakeout. But I warned that we probably would get a 50% retrace in there, and that taking a little bit on that would give the opportunity at a little bit lower move, and sure enough, that's exactly how it played out. It doesn't always work that way, but a lot of times you will see this where you get the nice run, and if you're running your steps too tight, you'll get this retrace and it will knock you out. Now, fortunately, the ABM is aware of this kind of pattern. The only problem is you don't always get it to be this perfect. Sometimes it can go a few more bars and come down, and the ABM may have started up a little bit further, and it can throw things off a little bit. So it's just something that I pointed out was worth noting. And then right as we get to the 50% line, I was pointing out, hey, we're getting to this point where if we start to see a gold below the 50%, hey, it could be an interesting short opportunity. Or in this particular case, we got the close above the 50%, and then right after that, the gold on the shakeout here started to rise. And so that was a pretty powerful call to say, hey, we're expecting from 2660 to 2672. So, you know, anytime you can sit there on an intraday chart like this at a 5K and expect a 12-point move, you're doing something right, and that's exactly what happened. So from its inception of the MBI, which was right there at 52, all the way to 72 for a nice 20-point move intraday on that one towards the end of it. Nice. It did exactly a nice, beautiful 50% retrace right there, popped off. That didn't quite make as high a high end on lower shakeout, and that usually is problematic. And so as the DOC spread and the steel crossed below cyan at the same time, they all crossed, and that's led to a little bit of the dip right back to the 50% again. You're getting nice resets of the steel on a lot of these. This one is a little bit more murky. I think it's probably going to be a little softer right here at the end, but we haven't even begun the Asian session, so this is happening a lot earlier than I normally do. And usually the European session is started by the time I give you the report. But overall, again, you know, what we're going to be looking for are the key levels, because now we have the 38%. Morganacci at the 67.50, and that's going to be a little bit of resistance going to it, because we can see that we got up to it and weren't able to quite get over it. We got to the 72.25 and then closed back below it. So that's going to be the next hurdle to cross over. Doesn't change the readings that we're seeing from a bullish standpoint, but worth noting is that we got a little bit of a yellow candle right here. That could be the beginning of either a major algo activity or the fact that we've kind of burned it up pretty quick. You know, the move has been pretty substantial, so are we going to see additional fund money coming in is the question, or did they already use it all up? You know, usually they get it by the third, and we saw huge activity on that, the fourth right after that, and now here coming into the fifth. It's a potential that there's still plenty to go. I think some of it's going to have to weigh on whether or not they want to commit to a much bigger push on this, or if they're just going to be content with consolidating a little bit of their gains. And we might see a little more back and forth action, because even though we had this nice intraday action, it's still consolidated, and we're still getting some pretty decent moves coming back. This is very normal for a market, and that higher ATR that we're seeing, I think it's just been fantastic from a trader standpoint, because it just gives you a lot of opportunity, and yet it's still fulfilling the expectation from a daily standpoint. So we just keep at it. It's perfect timing to and nice to see the markets trading in really effective ranges, which hasn't happened from years past. And so I think that things are pretty much in order, despite all the gloom and doom that you hear. I mean, you're always hearing about the terror, everything's falling apart, and you know, the market is you know, the precipice of a disaster. Which it's fine, it may very well be. It certainly has had a significant retrace, but fundamentally, You still have economic growth, and whether we're a little ahead of that with the market valuations remains to be seen, because if inflation starts to pick up a little bit and growth continues, then by no means are we anywhere near high valuation standpoint at all. So keep that in mind. I wouldn't even be focused on that as much as just following what the readings are, and that will keep you on the right track. The rest of it just becomes noise and kind of interesting to read about, but if you take it too seriously, you're going to get messed up. So, worth noting. As always, though, trade well and look for me on the Skype chat. We'll keep putting up great charts in that. Trade well.